Who will win, the Bulls or the Bears? As we approach the most important level so far in 2025, what does the market tell us underneath? In today's video, we take a look at a very important statistic that has started to improve, and that is breadth. With equal weighted markets and many small caps starting to really push along, could we be seeing the beginning of Wall Street's massive purchase? Or is it all going to end terribly? Well, in today's video, we take a look at the good data, the bad, and the downright ugly, as some market predictions start to turn incredibly bearish, while others are starting to look a little bit better. Join us as we cover everything to do with stocks, commodities, and cryptos in today's special edition of the show. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there is a lot to discuss. Of course, we've seen a sea of red across markets recently, but the more important factors have to be in what's going on in the smaller caps. Before we get into that though, let's talk about one of the four most important readings when it comes to a strong 2025. Have we seen a strong start when it comes to these stats? Well, unfortunately, the answer is probably going to be no. As I mentioned, we were looking for the toy barometer this year, and it looks like we're not going to get it. Basically, if we take between November 19th and January 19th, if the S&P 500 is up over 3% within that time, we usually can start to bank on a very positive year. Unfortunately, that is not the case for 2025, and it's more bad news when it comes to these longer-term reads. We've lost the Santa Claus rally, we've gained the first 5 days barely with a small eke out of profit, and of course, we've also lost the 3-month read. Will we also lose January? Remember, it's important that January is overall positive and all of these stats matter. So what does it prove? Well, it means that it's going to be a stock pickers year, it's going to be a sector rotation year, and we'll be needing to pay attention to some of the key reads. One of those being breadth. If you haven't looked at these types of things before, remember to subscribe to the channel. It'd be great to have you here. We do cover stocks, commodities, and cryptos daily. But let's first look at the bullish percent index. Now, we shared this account or this chart over on our X account, links in the description down below. But as you may see, this is a pretty historical moment here for the bullish percent index. It just made a higher high, and we haven't actually seen big ramps like this since the last two major sell-offs. Both August, which of course we were bullish on, and of course the April-May period, which again presented some nice buying opportunities last year. Now, could it go lower? The chances are possible, but usually when you see a sequence like this from the bullish percent index, it can mean that the low is in. And it's another great sign when we're building a confluence story, which we like to do together on the channel here, of why we are thinking that the market is turning more bullish at this stage. Now, to make matters, I guess, a little bit more bullish, we do have some of the better readers of the market in terms of the economists, the ones that are more correct recently, coming out and saying, yeah, you know what, I think 2025 is going to be pretty good. Now, John Higgins here, which was one of the first kind of reads of 2024 when it came to 6K, has now come out and reiterated that he believes that we're going to get 7,000 in 2025. Now, what I always like to say is you want to take an average of these guys and then use that as maybe a 2 to 3% confluence reason for your year. But I do think that some of the reads here resonate well with what we're thinking about as well. Remember, we're kind of thinking a 6,800 is very possible based on cycle theory, based on the state of where we are in this current bull run. And if markets can continue to improve, mostly driven by this factor down here, which is, of course, earnings per share improvement over the year. That's very important. It does happen. Then we could be in the last third of this bull stage. And that's going to mean that we're going to get a lot of different rotations that many people, especially retail traders, may not be ready for. It may not be all about the Mag 7 anymore. And instead, it could be about the backbone of the S&P 500. So do we think valuations could improve? Well, so far this earnings season, as you may have seen, banks have come out with record profits. We recovered those ones, and we'll look at TSM in a moment, and it was pretty good. Now, of course, one of the big concerns here was that there are some key risks to the bullish forecast. I agree. We do need AI, that is the artificial intelligence trade, the software trade, and of course, the semiconductor trade to continue to rise. But TSM is boding well for that across the board. So let's take a look at valuation and earnings. Why do they matter? Well, during some of the better bull runs, we tend to see PE, EPS going up. And you can see here, Jury Trimmer's chart, which is always a good one, shows you some of those great bull run periods and why we need to be paying attention to this. Now, so far, so good when it comes to 2023 into 24. You'll notice we've had that really nice PE plus EPS increasing, and that lasts for a certain period of time. When this turns sour, though, yeah, that's a point of worry. And of course, it often marks the late cycle or the danger zone for markets. So are we at that yet? Well, you'd have to say that maybe we've kind of crescendoed to the absolute peak and we're starting to see a little bit less, but still overall, it is positive. And this is something we'll need to watch because as we know, if percentage of the S&P 5 companies with positive 12-month percentage change forward earnings forecasts gets above 80, we're damn close to, then we are most likely in that final period of the bull run. Now, this is a very important stat. We really want to see this happen, this earnings, and so far, so good. Banks doing well, TSM doing well. Will we see big tech do well? I would guess yes, and of course the markets will like it because as we've seen before, if earnings are leading the charge, then people tend to pay attention. Speaking of earnings, TSM just crushed it. Yeah, it was pretty good in terms of stats. Now, some people would say, oh, well, it's what they expect, sure, but at least it's living up to expectations. Q4 beat, fantastic. Obviously, Q1 guidance looks impressive, and they have a 5-year target, which is interesting, but they believe they will grow at a 20% annual growth target. And in 2025, they believe that they're going to get a massive 20% as well. So what it's telling us is that this particular chip manufacturer, people are believing in it very much. People are buying. And as you can see here, I posted some of the biggest main customers, which include AMD, NVIDIA, QCOM, Intel, Apple, and of course, AVGO. So this is no slouch. This is the one. And in many ways, at $1 trillion, it kind of looks cheap when you compare it against some of the other major semiconductor stocks. That being said, it really isn't about just TSM. It's also about breadth. Now, everyone's making a big deal about breadth and, of course, saying, well, I'm concerned, we're worried. Well, you probably shouldn't be as concerned anymore. Since Monday, we've actually seen an incredible breadth change. Look at this, 377 stocks higher, 382, 369, and then we just ended with 376. Now, you wouldn't think that because some of the days almost look like down on the markets, but that's because the smaller cap stocks, that is the ones with less market capitalization size, were actually up, not the big Mag 7 stocks. So this is really interesting. We've got a breadth improvement. We've got, of course, bullish percent index making a higher high, and we're seeing percentage of stocks above 10-day, above 50-day, above all of these major moving averages moving up to new higher highs. Take a look at this 50-day. That is now a higher high. Now, this is important because whenever we've traditionally seen this, it has marked the end of the bear rally. So when these higher highs have come through, or the bear bust. So basically, we're looking at potentially a bull rally here. And this is a very, very good underbelly sign. A lot of people worried about it. All of a sudden, maybe you don't need to be as worried. Although we still haven't, of course, broken that key technical line, which a lot of people will be worried about. Now, Russell 2000 small caps, do we like them still? This is the answer or the question that we get brought up all the time. Since this particular stat, remember, we're back here at around this area, but we can remember that we've got a higher high potential soon. And guess what? RSP, which is the equal weight, has already done that. XLF has already done that. That's the financial sector. And KRE, the regional banks, have already done that. I think people lose sight a little bit here that Trump technically is a deregulation machine. He is coming in to potentially deregulate banks. Banks make up a huge part of the small caps. So if that is true, we've already seen a bit of a pickup on that kind of idea. But in general, these stats could hold. Prior year positive, yeah, the next year tends to be very good when we've hit that 200. A great stat, worthwhile paying attention to, especially with price action. Now, why do we need to be worried in 2025 a little bit? Well, it has to do with that kind of those 4 reads that we get in January. Santa Claus rally, gone. 5-day, barely there. The toy barometer, I don't think it's going to happen, but we'll see whether we get massive thrusts over the next couple of days. With so many great bull reads that usually mean the market's going to do well during the year, we have to start thinking about, will we see the average third year? That is like this, where some stocks are going up, some won't be. Yeah, we need to be worried about this and paying a lot of attention. If we're in a massive distribution where we're barely eking out profit through the year, There will still be a lot of money to be made, but it's going to be about rotation. And that's, of course, something we'll cover. Speaking of rotation, have we seen the weakness in the dollar? I like this stat, so I keep bringing it up. We've talked about it in every previous video, so go back and look at the other two. But basically, the gist of it is that we may have just seen the topping of the dollar. And if we have, then gold could do well. And also yields, such as the US 30Y, could go down. Now, is anyone ready to potentially disagree with Fundstrat? Wow, this is an interesting one. So according to this, Mark Newton has come out and said that they're seeing the potential here of a downside on Bitcoin at 62,000. Now, a lot of you probably will agree with this, but basically we've got an Elliott wave kind of concept here, an A move, a B move, and a C move. Now, you would know that if you've been watching this channel, I'm more of a believer that we're probably going to see an overall thrust here on Bitcoin and crypto based on seasonality, based on previous halving periods. And I do want to see things like Solana, which by the way has a whale on it at the moment, and of course Ethereum start to really do some improvement. Now, this was taken before some of the days of Reed. They believe 62. It's not impossible. I mean, of course, that's back to the structure, but I would think that would be doing significant damage to this crypto run. The chances of like a 72 or like this kind of level, that's where I felt like the low should be for now. And again, if you've had an ABC move, why can't we have a new wave 5? And instead of going this downward way, why couldn't we go back up? So I think this higher high will matter a lot to technical analysts. For us, of course, we like to use the data along with the TA. So for now, it looks like we've seen a lot of wipeouts of bears. It wouldn't make that much sense for us to go wipe again, considering how many people probably got liquidated. Well, we already know, we covered it in the last two videos. Speaking of bullishness, as we can see here with the data, that's delayed a little bit, but still we can see it. We knew it was coming. We've got positive Bitcoin. We've got positive Ethereum one-day inflows. Expect these to be positive again in the next session as we update them. But more interestingly than this, have a look at Solana. Some big whales coming in, and it looks like there's a little bit of action going on in Solana. So yeah, anyway, might be interesting. Price action we'll look at later on today's video, but some large trades going through Solana over the last 24 hours. Now, we have kicked off earnings season. So far, so good. Everything kind of meeting the main expectations. TSM obviously doing what you probably would expect. Not moving 8 and a bit, but still doing quite nicely. Fading a little bit there afterwards. But again, I think the earnings was pretty solid. Now, next week, we'll really kick off even further. So, of course, we'll update those charts when necessary on our weekend video. But let's move over to some big trades. Firstly, I just want to remind everybody, we have seen some dark pool activity down near the lows. That so far has been solidified with buying. So, of course, that's important. We also saw BitU, which is a ProShares Ultra Bitcoin ETF, buy the low. Big trade there. But to counter that, also could be a bullish action here. We've just seen a monster dark pool. I'm talking big come through on iShares Bitcoin. Now, do you guys think that's a buy or a sell? I'm going to think it's a buy. I know it looks like a sell because it's coming in near the highs, but I just feel like this is probably a good pullback in time. It looks like it's wiped the lows. I'm pretty sure it liquidated. We saw the liquidation numbers. That's a positive area. We also do have some information coming in, the big trades into treasuries, which I'll share on our next video. So once I've compiled all of those, we'll put them in this video so you guys can have a look at it. So could we have seen the top of yields? That's also a possibility. Remember, just as everyone crescendos to everyone needs a rate hike, all of a sudden we're seeing a huge shift in dynamics, but it's going to come down to probably the US dollar move, and we'll look at that soon. S&P 500 from the technical side, we all know where it is, guys. Series of lower highs. Yeah, that's not great, of course. That is definitely a bearish sign. If you're a bear here, I couldn't blame you, but I do think some good structure's been put in place. 59.30 obviously closed above. We're sitting above that 5,900 put, which we know sits there, and we've filled the gap, which is pretty nice. So we wiped off everything from the election. One thing's for sure, though, it doesn't look like from November 19th, which is over here, we're going to be putting in that 3%. As I mentioned, November 19th, yeah, we're barely up on that. I mean, we're really going to be able to put in 2 days, 3%. If we do, good signs for the longer term. At the moment, it's really cloudy how this year is going to play out. So I think it's going to be short, sharp, rotation, make quicker decisions, that type of thing, or hodl the quality that you believe has still got good earnings in it so it can hold along. In terms of options levels today, these are the two highs and low levels. We can see the rejection coming off what I would call a small res zone. This is certainly where the bears have to push it down. If they do push it down, I'd be looking at the 58.50, 58.40 level to see whether bulls rebuy. And of course, if we can make it through these series of lower highs on both the NASDAQ and the S&P, then we should be looking at a positive gamma environment. And 6,200 would become the next target. So I think things have, of course, improved. Now, some people said to me in the comments, they said, Tom, you're drinking the Kool-Aid, man, being bullish right now. Yeah, look, it's harder to be bullish than it was in 24, but still, breadth improvement, obviously some structure improvement here, and you just cannot discount these things like RSP. I mean, you look at this is the equal weighted market. Does that really look super bearish to you right now? Doesn't to me. I mean, volume's pretty consistent. It's done that Wyckoff third law, which we always like to see. And yeah, I mean, it's an improvement, guys. You've got financials improving. You've got other stuff improving. So if earnings keeps coming through with the goods, you don't really want to be bearish on that. Let's now have a look at the options and see what's going on. First up, 5,900, of course, is the major put level. And of course, we also have here that 6,000 call massive positive gamma switch zone. So these are the two levels here, 21st, of course, and the OPEX, which is coming upon us. Generally speaking, when you're looking at things like the OPEX, we do get more volatility into it. We can also crack important zones, but I would say just, watch around 5,900. And yeah, 58.50 gets hit, maybe there's going to be a buyer for the S&P. So we have to remain probably between 58.50 and 50, maybe 59.80, something like that over the next 24 hours. Pretty wide range, but yeah, it is what it is. Now, when we move over to the next one here, which is of course NVIDIA, we're holding, but we did sell into the end of the day. All the Mag 7 sold as we moved into breadth across the board. 130 still kind of the put support, and 135 where we go positive gamma. So no real concerns there for NVIDIA just yet. When we move over to Tesla moved back down. I thought we might be able to, we're still in technically positive gamma, but we're looking for that 450 if you're on the buy side. I'm personally out of Tesla and chilling for the moment. It was a great run. I'm not really sure what Elon's doing at the moment. He's getting into fights with gamers and all sorts of stuff. Obviously, we've got all sorts of things. SpaceX. I'm sure a few of you are aware of the gaming incident. But yeah, basically, the way we look at this is, that was a great run. We totally went over forward PE. We went to 200 forward PE on Tesla when we were getting close to 500. We're going to have to take a breather. So price action is short, sharp, and sweet at the moment, up, down, and all around. Let's now look at the leads. Home builders, good signs. Yeah, kind of change the trend towards the upside here on the small timeframes. That's a good sign. The American consumer discretionary versus staples, certainly improvement. That is good sign. And US 10-year yields, 30-year yields, 20-year yields, all coming down as per kind of the discussion we had 2 days ago. So that's very interesting. These are all good signs again for the market. And even the US dollar is coming down off the back of course, this pattern. So we've got that kind of strong evening star type of thing. And when you get these patterns, these ones do matter. So we've got an evening star. We're putting pressure on that 20 daily moving average. This is going to be a critical zone, of course, for the dollar. But the actual one I want to look at is this is options again. So you can see here that options are coming down, which we already knew. But it's actually the euro. So the euro 20 daily moving average plus the trend line down. This could be a good trade. I am very much looking at this. I don't blame anyone for trying to short this. I totally understand why, although you're shorting it into, of course, a solid candle pattern. But if this breaks to the upside, this could be a monumental shift for dollar. And of course, when we see that monumental shift in dollar, that could impact some other things we're talking about. Gold, are we going to see a 27.30? We're bullish gold, so let's get on it. Come on, guys, let's get through that level. We are a little bit overbought into here, but we'll see whether we can do it. Obviously, we've also got silver improvement. I'll just quickly show you silver. Little bit of improvement there, still behind the gold wagon though, and oil chopping around at these highs. I still think oil is just chill. I think it's a resistance at this stage. Tesla, as we mentioned, 413, doesn't really give us much. I thought maybe we could go towards 450 here. We'll see. But yeah, again, I am very neutral on Tesla in terms of price action at this stage. I'm not really looking at it again until 340, but from the TA perspective, 380 is the support. And somewhere here is a mini resistance, and then 450 is the next resistance to 460. Semiconductors holding barely on, so that's good. Of course, TSM will be what a lot of people are watching. It managed to hold 4% on the good earnings, and you can see here it's been very solid. So this is the backbone of Taiwan. Obviously, semiconductors matter, and so far, so good this earnings season. Now, what about Nvidia? Another Marabuzu. Yeah, two of them. Wow. Okay, this is interesting. If you were looking at just Marabuzu candles, you would say, "Wow, that's pretty negative for Nvidia." So, of course, could this be all part of a distribution? That's probably the most bearish looking chart at the moment if it does break new lows. So we'll have to pay a lot of attention to this. Definitely Nvidia matters here at the start of 2025. We'll see how that goes. I'm sure a lot of people are making a big deal out of Apple, so we'll just talk about it. Apple basically extended past what you would usually see. It's pushed down heavily. This is actually in a fair collapse at this stage, down 12%, the worst performer in the Dow this year, but it is going to come up to a very important level. Now, why I think this is important to pay attention to, because it must hold somewhere around this low 220 area. Meanwhile, we've got things like Google, which looks much better on the daily. And of course, we've got Amazon, which are the two cheapest of the Mag 7s on PE ratios, looking like it could be a flag. So not concerned yet, but Apple obviously is dropping. HSI, China stocks coming back up to that really nice level we've liked before. The 61.8 still holding. Is it over for the sells on China stocks? Remember, watch iron ore, and so far iron ore is doing pretty well. So I'm kind of liking the iron ore move. Iron ore stocks doing okay as well, which is fantastic. US 2K not through 2300 first or yet, but RSP and KRE, etc., doing better. We all know about NASDAQ, downward trend line, break that. It's going to be the same story as the S&P. Where are the buyers? Probably around 20,800. So at the moment, the bears could bust this level, then we may see buys. Now let's move to crypto. Firstly, Solana. Obviously, a couple of whales potentially buying in here. Nice movement as it broke through 193. So that's been bull, 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 bull. First res at 220. We can break that through, then we can potentially go to an all-time high. So that's a pretty big deal. And Ethereum just missed that box over the last 24 hours as it dropped, but it did find two strong buy wicks. So again, breaks this little 3,400 again, looking better. So crypto is certainly looking better, and Bitcoin is leading the charge, putting pressure on that 102, which could break a lot of theory towards the downside. Remember, a lot of people are now saying 62, 72. If you're a bull on crypto, you want everyone to be bearish. So this actually looks to me like a better chart than it did. So I don't know why I'd be bearish on this chart. But anyway, nice strong rejections at this point, lots of liquidations, and potentially a bit of a short squeeze. Guys, if you enjoyed today's video, then please remember to subscribe. Give it a like also down below. It does help us out. Comment if you have any questions. And also, I just wanted to reiterate that we're sharing more on LinkedIn this year. So make sure to click that link if you're interested in trading psychology. I've posted a bunch of top tips there already. Obviously, over on X. And to summarize today's video, it looks like breadth's improving. It looks like the major structure and things like equal weight and value stocks is also improving. And it looks like the market may not be bear busting, which is what a lot of people are thinking about. Obviously, we're facing one of the biggest challenges here. If you are a bear, you could make a lot of cases for this. We'll be looking for, of course, a huge amount of confluence and synergizing this market. So we want to see that dollar obviously break down as the euro breaks up. And of course, we want to see yields continue to drop through. Are we out of the circus that is the bear sell just yet? Maybe not, but things certainly have improved greatly. And I think you guys can see that on the charts as well. Thank you so much for watching. We'll see you in the next one. Bye for now.